China was more interesting in September. Then obviously we had a big spike. I mean, we didn't think that whatever it takes moment, like a lot of, people were talking about, was there. So now we're waiting. I mean, we reduce a bit the allocation, but we think China into 2025 can be something interesting. Why that? Because we think that China government and PBOC will wait for the first quarter numbers. We think that will be tough because, one of the two main drivers basically last year has been exports and manufacturing capex. Export most probably has been front-loaded. Manufacturing capex, we start to see capacity utilization going down, so we have to reduce that. And then most probably into first quarter, after the first quarter, we will focus more into consumption. And then there are auto consumption names that are quite cheap in our view.
We're just getting some lines out of Beijing this morning as we speak, actually, about wanting to expand the scope of some of those consumption trade-in programs. How much are you looking at that? How convincing is the consumer story at this point?
Obviously, I haven't seen the details. The expectation now are for 2 trillion of this trade-in consumption, where consumption for China is both investment and consumption per se, and plus 1 trillion was for more bank recapitalization. So I don't know which are the numbers that they are mentioning, but honestly, we think that, like we've been doing, our take was that they wanted to reach in 2024 5% GDP target, and they will reach that, and was more a buying time waiting for, okay, what's next? Mr. Trump will come in a couple of weeks. What will happen on tariffs and so on? So we'll see, and so I think that they are buying more time, and we'll see, and we'll be implementing more after the first quarter this year.
Right, and would you be looking at sort of broad exposure or more of a stock pickers market?
We are stock pickers. So as I mentioned, consumption names are quite cheap. Probably first quarter will be a kind of not very good. And so we'll take that opportunity in case it happens to increase our exposure there. So because, if you look into 2024, obviously, people are adding more into financials, something that has been higher yield. We know that the CGB, basically the Chinese government bonds, has been going down now, is around 1.7%. So obviously people taking more dividend yield, but now dividend yield for banks is around 6-7%, not really attractive in our view. We like to get more into consumption names, but we are trying to find the right time in order to increase that exposure.